Innovative industrial properties. What is the buy case? Is it a good time to buy today? Now, I've looked at the bear case, but I think there are definitely opportunities here for the long-term investor that is willing to take on a little bit of risk. In this video, we'll look at some of those potential upsides and some of the benefits of investing in IIPR today, so stay tuned, my friends. Okay, so innovative industrial properties, the bull case. I'm in fast graphs here. Now what I've done, if you look down here, is I've zoomed out to the end of 2021, because this is the history. This is what some investors see, and I don't think we should be too fooled by this or too distracted by this. I am currently looking at this in terms of the adjusted funds from operations. So this is kind of like the earnings per share for REITs. If we look at the figures down here, AFFO grew quite strongly from 2018, 100%, very small company, 2019, 144%, 2020, 53%, 2021, 33%. So it had very, very strong AFFO growth. Now, if you look here as well with the dividends down the bottom here, $1.20 per share, $2.83. $4.47, slower growth there to $5.72, also reflected in the slower growth in AFFO. So, is that good? Yes, it is amazing. Share price growing basically here with the price to AFFO, more or less the same as the price to earnings ratio, looking at about 36%. So, what could possibly go wrong, or what can possibly sort of put a dent in this story? Let's have a look. Hit subscribe now, become a better dividend investor. Now what I've done is I've zoomed out to include the more recent data. We can see that IIPR hit a high of $275 a share here at the end of 2021. And since then it has come down to $88 a share, and it's even lower now at about $85 per share. So we've seen a dramatic, huge decrease in prices here. So if you're holding from peak to peak, you would have been down quite a substantial sum of money indeed. Now that's not what I want to dwell on here. I want to dwell on what is the opportunity for us going forward. Well, one of the big reasons for this dramatic decline in prices has been the way in which we've seen the AFFO slow down substantially. So increases of 33%, 25% increase into 2022, and then projected increases here in 2023, 2024 are only 2% and 10%, and even potentially a drop perhaps in 2025. So that's what the share prices are reflecting. Is this reasonable? Well, yes, it is reasonable. You can't expect share prices to be trading at a very high price to AFFO ratio if there's not strong growth behind it, and where this company's more, shall I say, more speculative for various reasons, as we've outlined in the bear case. But is there a case to buy now? And that is the key question, and I believe there is. I do own shares in IIPR. I wish I could pick up more shares at this price. Unfortunately, I was buying some of them on the way down here as well. So what is good about the company at the moment? Well, we can see a very nice dividend yield. It's really important to note that these dividends are not going to be increasing at the same rate that we've seen in the past. So I think we've still got reasonable dividend growth ahead. But it's much more muted than it was, so we're not going to see sort of 100% dividend increases. They can't sustain that with the much slower pace of AFFO increases. So we will see right now a reasonable starting dividend yield with some reasonable but much more muted than what we've seen in the past dividend increases. So that's important to note. So if you're looking for an dividend income play, this does provide good income. It provides good income growth, but it is speculative and the company has challenges. We'll get into that next. Fantastic. In the fast graphs here, we have a forecasting calculator. Now, a couple of items here I think we need to pay attention to. Number one, the analyst estimates here gives us an insight into those revisions over the past. From 6 months ago, say for 2023, they were forecasting $9.50 AFFO. and now they're forecasting $8.56 AFFO for 2023. So we can sort of see quite a steep decline, and comparably also for 2024, AFFO forecast was $10.32 6 months ago, and now it is $9.45, so quite a steep decrease. Now, sometimes I would switch to a normal multiple here for a price to AFFO multiple. You can see that's much higher. I believe that gives us a completely ridiculous estimate here. Now, this is just a forecasting calculator. You have to be using it sensibly. I certainly don't think that in the current circumstances, IIPR warrants a 36 times price to AFFO multiple. I'm going to switch back to here. We're going to use a 15 times multiple. And we'll look at the end of 2024, where we have 4 analysts reporting results and estimates for AFFO. And I believe if prices recover and AFFO grows, as the analysts estimate that it will, we're looking at potentially a total rate of return of about 82%. That includes our dividends. Thank you very much. And that represents potentially an annualized rate of return of about 36%, which is, I think, not to be sneezed at. But there is downside opportunity here, and as I said, this is a more speculative position. So why then might you want to buy? Let's look a little bit more into what's been going on. There are major tenant problems with a large tenant, and I think that really sort of kicked off this decline in prices here. I think we were beginning to see a bit of a bump here at the end of 2022 in the share prices, as it appeared as though Innovative Industrial Properties was getting this tenant under control, and the issues and the problems associated with that large tenant began to seem more reasonable and more manageable. So what's changed, and do we need to be concerned? So what's been going on? Now, the recent price declines have been driven by this news here. So this is January the 18th. We can see, obviously, the Q4 updates and full financial year. Now, there's a lot of news in here. Some of it is certainly, I think, more bearish. For example, they have rent collection and deferral issues with some clients. Now, I'll say, yes, there are reasons here to be cautious and careful. 92% of rent collected today doesn't sound good. But again, you've got to consider that this is not a huge tenant. And they provide some figures here as well. So here, for example, parallels and default on rent at one of their properties, approximately 3% of property capital invested. Green Park Industries default on approximately 3% of IIPR's capital invested. So we're not talking about substantial changes here in the rent collection and their investment. Now hopefully as well, these are Pennsylvania and Michigan, so these are, I think, areas where cannabis can certainly still continue to grow and expand, and so IIPR should be able to find new tenants for these facilities reasonably well. Now, probably the big news here that I think is really positive is a really good update on King's Garden, and to be honest, if I was writing this, I probably would have led with this news. They're paying rent again on the 4 properties in California that it continues to occupy. And so I think it looks as though they've managed to navigate the issues with King's Garden, a large tenant, fairly successfully. And I think that provides the market with a little bit more confidence, and it provides me with a bit more confidence. Now, I think as well, when we look up in those earlier rent deferrals, the measures in place, they're using, I guess, taking a slightly tougher stance with the tenants, so the tenants are going to be required to pay up or get out, essentially. So I think that's certainly positive. If they do have to push the tenants out and retake possession of the facilities again, I think that would dampen the rent collection and the AFFO. But again, they're relatively small tenants, and so I don't perceive that as being a very serious issue there. Now, coming back to fast graphs, what we can sort of see here is a dividend payout ratio of about 85%. And I think that's quite nice, quite safe. They've been working on improving the dividend payout ratio. Now this is in terms of AFFO, which I believe is a reasonable way to look at the dividend payout ratio for a REIT. So even if those tenants were in default and the rent stops being collected entirely and those tenants are kicked out, the dividend as it stands, I don't believe, is in any great risk. Now, if those challenges spread to other tenants, which is possible, then yes, the dividend might be at risk, but I don't think with those tenants, a little bit of delay there with the rent, I don't think that's going to threaten the dividend payout here. Now, other really important points as well. I'd like to also draw attention down here to the long-term debt to capital ratio. So basically, this is a company with no substantial long-term debt. Now, debt can be great for growth, but they've managed to grow without taking on a huge amount of long-term debt. Their maturities, I think, were in 2026 onwards, so there's not a lot of maturity here at high interest rates. So I think they're quite insulated from that element of the macroeconomic cycle here. So they're not burdened by debt. They're not facing challenges in terms of how they're going to repay this debt, and I think that's a really, really, really powerful position for IIPR to be in. They've got a good dividend yield. They've got a reasonable, I think actually quite low here, price to AFFO ratio, given that there's still expected AFFO growth in the future. So I think there's a lot of things that this company's doing right and doing well. Now, back to the recent news. So there's still more construction in progress. They are working to evaluate non-cannabis uses to the property here due to a change in market conditions in California and rezoning of the property. Now, as I said in the bear case, that can result in a loss of value on this facility where the invested capital is greater than the benefit that can come from leasing it out as a regular, say, industrial space, but it's not terminal. And again, this is one element, one part of their portfolio. Now, their portfolio is, if we scroll up, their portfolio is very, very, very well diversified. Portfolio statistics: no tenant represents more than 14% of the total portfolio. No state more than 16% of the total portfolio. So if a tenant does go has a serious issue, it's 14%. Now, if you think back to an 85% payout ratio for the dividend, in terms of the payout ratio for the dividend relative to the AFFO, one big tenant, their biggest tenant, does disappears overnight, they can still pay their dividends based on the reduction in AFFO. Similarly, if one state has a serious problem, they could still actually pay basically pay their dividend. And so I think there's a lot of safety and security here as well for the company. And here are these balance sheet statistics which are important. 12% debt to total gross assets, which is fantastic. No secured debt, and as I think I said before, no debt maturities until 2026. So except for a very, very, very small amount here, 6.4 million. So we're basically talking about a rock-solid, stable company here. They've got a reasonable dividend payout ratio, and they're managing their tenants reasonably well, as we can see with the King's challenges over the last year. They're able to manage their tenants, and they seem to be getting tough on the current tenants, which are in a more tricky space. Now, it doesn't seem to be a widespread. Now, on top of this, I think we can see also that there's going to be still changes in cannabis reform across the states. It is slow moving, but I think there's still the opportunity here for IIPR to do well. So, where does this leave us in valuation and potential returns? So I'm switching over to Finbox here. This is another useful analysis site that I do use. As we can see, current prices of about $84. Now, if we look at the analyst targets over here, analysts currently have the targets from about 125 to 179 with an average price target of about $150. So that's a huge and substantial upside there if you trust the analysts. I think we're going to see some substantial downgrades, however, based on the news that we were just looking at, and some of those challenges with the rent deferrals and rent collection. I think some of these analysts are going to be revising downwards quite strongly, perhaps even 50 or even potentially a drop of about an $80 on their price targets. So do expect that to come down over the next several months. Perhaps more accurately, I would take a range of financial models here. Now, these financial models are estimating fair values here of about $111 to $143, with an average here of $130. Now, if we take that $130, it represents about a 54% upside from where we are today. And even the more pessimistic model here, estimating a fair value of $111 per share, still represents quite a substantial and comfortable upside here. Now, the financial health overview here, in terms of cash flow health, growth health, momentum, and profit health, all looks pretty good and pretty stable for the company as well, which sort of reflects what we've just been talking about. Now, one of the things I do like about Finbox is this ability to also get a slightly more nuanced view of some of the analyst estimates going forward. So I've taken estimates up until the end of 2024 here, to give us a little bit more insight. Now, as we can see, I'm going to scroll down here and I'm going to look at the capital expenditures. So it looks as though, as we can see from the news release as well, IIPR is continuing or intending to continue to make acquisitions. So capital expenditures are still going to go up quite substantially. The dividend per share at the low end sees, I think, some reasonably muted growth, as we sort of suggested before as well. So the average growth as well is not very high. And we can sort of see that going up barely into $8 a share by the end of 2024 as the estimate. AFFO estimates, so the mean there, again, it's creeping up, but it's not going gangbusters and sort of, 50% increases per year as we've seen in the past. And so I think that's really important to note as well. So muted growth going forward here. Now, one last quick evaluation. I just want to have a quick look at the blended or the price to AFFO ratio here. So for IIPR, it's about 10 times. If we just look at a couple of other industrially focused REITs, Marigold Reality Trust, for example, has a price to AFFO ratio of about 27 times. And we can see here more debt on the balance sheet as well. STAG Industrial, 18 times price to AFFO ratio, and again more debt on the balance sheet. So now obviously these are two industrially focused REITs that are more stable. They don't have the sort of the regulatory concerns that innovative industrial properties does have, but again they are reflected even in reasonably strong price to AFFO ratios. So what that seems to suggest to me is that even if innovative industrial properties has to convert some of their facilities from cannabis through to regular industrial use, I think they could still do reasonably well. So cannabis, this is not for the faint of heart. Yes, there is downside risk, but there's also good opportunity here for the savvy investor buying at the right price. You might need to hold this for a while. Dividend growth will be muted, but there is opportunity here, I think, if you're prepared to take some risks on as well.